Multimodal logistics company Allcargo Logistics continues to impress investors by posting robust results in the September quarter. In our Ideas for Profit today, we'll discuss what should be investor strategy on this one right ahead of the delisting plans. Well, second quarter's total revenue was impressive at 2,327 crore rupees. That's up 25% from the same quarter a year ago. But the headline figures are not comparable due to the inclusion of Gati's revenues in the consolidated financials. Now, excluding Gati, the revenue growth stood at 6% on a like-for-like basis. Now, the top line in the core business also was driven by 8% growth in the modal transport operations, Allcargo's largest business segment. Now, while higher realizations and also an uptick in the volumes drove the revenues of the MTO business, the container freight station or the CFS remained quite weak due to the shortage of containers this time around. Also, the execution in project and engineering solutions improved on a sequential basis, but the segmental revenues in Q2 were down 9% year-on-year. Now, EBITDA rose 25% year-on-year to 162 crore rupees as well. Global shipping volumes fell off the cliff during the first half due to the pandemic as well, but recovered during the July to September period owing to the healthy consumer spending. Now, the resurgent restocking demand in the American and the European markets in November to December has led to an unexpected recovery in overall tonnage volumes as well. Now, global container shipping rates are also trending higher on the back of rising trade volumes. Now, the Cass Freight Index for the month of October showed a year-on-year growth for the first time after a gap of 2 years, highlighting continued improvements in the freight shipments and also the expenditures that's across global economy. Now, Allcargo is also monetizing its land banks that's across Telangana, Tamil Nadu, Karnataka, Gujarat, even Goa and Maharashtra, and that's through the development of these logistics parks. Now, the company has committed about 1,000 crore rupees of investment with 5 to 6 million square feet of the leasing area, and also has entered into a definitive agreement with the Blackstone to sell 90% stake in these warehousing subsidiaries for consideration of about 380 crore rupees. Now, Allcargo will retain operational control of the warehousing business, and that's along with a 10% stake in profits. Now, the company has received about 240 crore rupees from Blackstone, and the balance will be received in parts through the year. Now, with the logistics parks nearing completion, the capital expenditure for FY21 and FY22 is expected to be quite limited. Now, the cash flows from the sale and warehousing operations will also be directed towards the repayment of debt, which actually stood at around 1,300 crore rupees right at the end of September. Now, the promoters of the company have already initiated proceedings to delist the company's shares, as the management really believes that taking Allcargo private would allow them to really streamline the company's operations and also to improve its capital structure. Now, the board has already approved the delisting proposal, and the floor price for the delisting has also been set at 92.6 rupees. Now, the delisting remains on track as the company has already gotten approval from around 90% of its shareholders as well. Now, Allcargo could see a favorable impact during Q3 and Q4 as the recovery from the pandemic continues to ease the macroeconomic pressures on the industry. Also, while the delisting price offers downside protection, the valuations at 14 times FY22 earnings do appear quite reasonable for a gradual accumulation by investors, and an improvement of return ratios and also the reduction in leverage could definitely trigger a re-rating for Allcargo Logistics in the medium to long run.